So today we'll be studying bank reconciliation statement. In bank reconciliation statement, we match on a particular date our balance of cash book. When I say cash book, I'm talking of bank column of cash book with the passbook, and we try to show the changes which are taking place in the two. What is the reason why these two which should be same are not same? So there could be things which are there in the cash book but not in passbook. There could be the things which are there in the passbook but not in the cash book. And there could be certain errors. We try to find them out. In this chapter, we will be using the word cash book as bank column of cash book only. Please remember that. So this is how our cash book looks like. You have left side receipts, right side you have the payments. Whereas our passbook is maintained by bank looks like this, where on debit side we have withdrawal, on credit side we have all the deposits, as whatever comes as withdrawal should also be there on the payment side of cash book, and whatever is deposited should be there on debit side of cash book. If it is not, we will find the causes of difference in the two and try to rectify this mistake which we have made and find out the balance of the other book, keeping in mind these changes. So we classify these causes into the ones affecting the cash book but not passbook first of all. So the first one is checks issued but not yet presented for payment. If I've given a check to someone but that person has not reached bank, or due to any reason bank has not paid that money as yet, so my check has been issued but it has not been presented for payment, so that's why the cash book balance has been reduced by me, whereas passbook balance remains the same. Similarly, checks when these are deposited by us but not yet collected, it takes nowadays it takes 4 days to 4 hours to collect the money, but if you have deposited and it has not yet collected due to any reason, the person has not reached bank, or any issue is there in the checks, or it by you when you deposited it you have made entry in your cash book, but the person who was supposed to deposit has made a mistake, has not gone, has not deposited, has lost it. Any of these reasons could increase your cash book balance but the passbook remains the same. Similarly, errors can take place either on debit side or credit side, and accordingly it impacts. So let's try to see examples of each. Say I have a cash book balance of 50,000. I give a check of 3,000 to ABC. So my balance left would be 47,000. Whereas no one has gone to ABC, has not gone to my bank to collect that money as yet. ABC has kept it in his pocket and he's not going there. So till that time, for me the payment is made. I have reduced my cash book. When I say cash book, again I repeat the bank column. I have reduced it, but whereas my passbook balance remains the same. As passbook balance remains the same, there is a difference in these two balances which are meant to be same. My cash book is lower than my passbook. Similarly, when checks are deposited but not yet collected, when we deposit the check, we use the word checks in hand, but somehow it has not been collected by bank as yet, so there's no change in my passbook. Passbook remains the same. So passbook is higher, cash book is lower. Cash book is higher, passbook remains the same. Now there are second category of causes which are there in the passbook but not in the cash book. Let's try to study them one by one. First is direct payment of by bank. It could be insurance premium, it could be electricity bill. You have given the standing instruction, like you get your bills paid for different reasons, like your OTT and all. The balance comes on your phone that this money is due to be paid. You have given them standing instruction that on this date you will give this expense of mine. So they have paid it. The date has come, they have paid it. You have forgot to make the entry of that. So till that time the two will be different. Or your customer directly deposits in your account, or your debtor deposits, or any interest or dividend is collected by bank on your behalf. You've given to your company from where you get the dividend your account details, they have directly transferred to your account. Once you look at the account, you will come to know that there's a difference in the two. There might be a mail and all, you would have ignored it, but You have to check the two to see why this dividend is there in my passbook but not in my cash book. Although it's good, it's increasing your balance, but you have not made the entry of that in cash book. So that's why the difference in the two is there. If any interest is given by bank, they don't come home to give the interest, they directly increase our bank balance. So when we look at our passbook or statement, we come to know of this amount. Next is interest or any other expenses charged by bank. Bank charges us for the messages, bank charges us for the debit card, bank charges us for the checkbook. There are different charges which they charge on us, and those charges are directly deducted from our account. And once we look at the passbook, we realize, okay, these are the expenses we have been charged for. Any bills collected by bank. Now bills of exchange is not a part of syllabus, but earlier when bank used to take bills on our behalf or any bill used to dishonor, then bank used to reduce our balance. Those were also two extra causes which you need to know, but you will not be tested for the same. Or any error happens on by bank on debit or credit of your passbook. So let's look at how direct payment looks like. Say my cash book was 50,000. I don't know of any insurance money paid by bank on my behalf. I forgot. I don't know. It's not the right thing. I forgot. So I keep the balance same. When I look at the passbook, my balance is reduced by 1,000. When I see the reason, I come to know that bank, because that particular date had come when bank had to pay insurance premium, they have paid, so bank balance has reduced. Now I can also reduce the balance, but as of now, my cash book balance is higher than passbook balance. Then any direct deposit. When they deposit, I may not be knowing about that. When I check the bank balance, I come to know, then I make the change in my cash book. So these are the causes, and how will these causes affect us? Let's try to study that. How do we resolve this problem when the two gaps are there? As of now, we are tested only for the question when balance as per one book is given and you are expected to find the balance as per the other book. You will be given a list of causes. You need to analyze them. They're affecting which book, they're increasing it or they are decreasing it. So let's try to look at a problem based on the same. This is a problem. We have given a check to ABC, check issued but not yet presented for payment. This is my first cause. This part we have already seen, 3,000 given to ABC, but here it remains the same. So checks has been issued. What has happened? My passbook balance has reduced. Now let me show the same. Say I am given the balance as per cash book as 47,000. I need to find the balance as per passbook, which is 50,000. What should I do? I need to add this amount. What is this amount leading to? Cash book decrease. Checks issued but not presented leads to cash book decrease. So from here I can generalize, if I have balance as per cash book and I add to that the decreases, I will get my balance as per passbook. This example I have created for one transaction. Likewise, there are four kinds of things which takes place. So once we look at all of them one by one, say checks deposited but not collected, the cause is cash book increase. I am given, say, passbook cash book balance. I need to reach passbook balance. So 54,000, I need to minus 4,000 to get 50,000. What is this cause? Checks deposited but not collected, which leads to my cash book increase. So if I start with balance of cash book to reach the balance of passbook, I need to deduct the causes which increase my cash book. So in a way, if we start with cash book, inverse relation is there of increase and decrease. If it increases, minus; if it decreases, plus. So when I conclude that, I come to a rule which is like this. I'll show you the passbook causes also. When the passbook balance is say 50 and insurance premium is paid, it becomes 49. In that case, when I'm supposed to make, I have taken one cause of decrease insurance premium. So what is my balance as per cash book? 50,000. Insurance premium cause leads to passbook decrease. So what has happened? I have to decrease that from my cash book balance. So my observation in the same would be like this. If I have to simplify it, we can study the causes as two things affecting cash book or passbook. Look at the cause, see if it is affecting your cash book or passbook. Then see if it is increasing it or decreasing it. So we have a few causes only which we have discussed in detail here. Checks issued but not presented, checks deposited, error on the debit side of cash book, error on the credit side of cash book. Similarly, direct payment, interest allowed, interest charged by bank, those are affecting our passbook. From this, we have generalized a rule. Rule 1, if we have to reach from our cash book to passbook, if you're given this balance plus causes, you write this, read the causes in the following way. If the cause is affecting passbook and it is increasing it, add it. If the cause is in cash book, it is decreasing your cash book, add that. Similarly, if there's a cause in passbook, it is decreasing it, reduce that amount. If there is a cause in cash book, it is increasing that, deduct it. So this rule we can learn. When we start with cash book has indirect relation. Decrease is added, increase is deducted. Whereas the other book is passbook, which we are trying to find, has direct relation. Increase is added, decrease is deducted. This is how we apply this rule, and if we are given cash book balance, we reach the passbook balance. And it is reverse for the other book. If we will be given in rule 2, if we are given balance of passbook, we go reverse. We add, other book is cash book, increase in cash book is added, decrease in cash book is deducted. But for the same book, passbook, rule is reverse. Decrease in passbook is added, increase in passbook is deducted. This will make us reach the balance of cash book. Let's look at one example. How do we present such questions? I'm given balance of cash book. I'm told checks are issued. Checks issued will lead to my cash book decrease. I paid insurance premium, that leads to my passbook decrease. I have studied the causes. Let me see the rule 1. I'm given cash book. I need to find the passbook. As per rule 1, decreases in cash book are deducted and decreases in cash book are added and decreases in passbook are deducted. So in 40,000, if I add 7 and deduct 1,000, I'll get the passbook balance. This is what would be expected in a question from me. This is how the format looks like. We write BRS as on a particular date given to us in the question. Here we write cause, or you may use the word particulars. We make one plus column and one minus column. The things which need to be added are shown in plus, which need to be deducted are shown in minus. Balance as per cash book is given, nothing given, we presume it to be favorable, so we put it in plus. Checks issued, as I told you, will be added, so put in plus column. Bank paid insurance premium, minus column. Do the total of plus column and minus column. Plus column is more than minus column. So 47 minus 1, 46,000 is my balance. And obviously plus is more, so this would be a favorable balance. We'll come to that, which one is favorable and unfavorable of which book. So we started with favorable. We are somehow getting the other one also as favorable balance. Now example 2. You are given balance as per cash book 30,000. Checks deposited leads to cash book increase. Direct deposit by customer, passbook increase. You are given cash book, we need to reach passbook. We will use rule 1. As per rule 1, this would be deducted, this would be added. You can learn the rule, write it, then you'll be able to analyze it. So balance as per cash book, nothing given, favorable. Checks deposited, we decided to minus, and this had to be added. So this column total is 39, this column is 5. 39 minus 5, 34,000 is balance as per passbook. Nothing given, this is considered as favorable. Plus is more than minus, this is also considered as favorable balance. There are other examples also. You can apply the rule, this rule 2 over here if you want. Here, as I've already explained you, it is given balance as per passbook, passbook inverse relation. Increase is deducted, decrease is minus. The other book is cash book, direct relation. Increase added, decrease deducted, and we reach the balance as per cash book from there. Now, what is favorable, unfavorable we were discussing. In cash book, on the debit side, we have all receipts. So the cash book debit balance means receipts are more than payments. So this is favorable for us. Whereas credit balance means credit side is more. Payments are greater than receipts. It's unfavorable. In passbook, it's other way around. Debit side has all your withdrawals and credit side has all your deposits. So withdrawals are are greater than deposits. So this is unfavorable. Here withdrawal is less than deposits. It's favorable. It's reverse. Cash book debit is favorable, passbook credit is favorable. The people maintaining and what they're putting on website is the reason. So the when we see the answer, if you are given unfavorable balance of cash book, so the plus and minus column which we had, that amount will come in minus column. And when you do the final answer, total of minus column is more than plus, the answer of the other book is also unfavorable. For example, I start with 50,000 as unfavorable of cash book. Unfavorable of cash book is credit balance of cash book. I have checks issued of 2000. Checks issued is cash book decrease. Cash book decrease is added. So let that be. Sorry, this is checks issued. So this is cash book decrease. Let the amount be 2000 rupees. So this comes in minus column. This has to be added in plus column. My plus column is 2000, minus column is 50,000. 50 minus 2, 48,000 is my balance. But minus is more, so it will be unfavorable balance of passbook. And from this chart, we know unfavorable of passbook is also called as debit balance of passbook. So that we need to remember. So that's how you can do the BRS questions. You adjusted cash book is not given as a part of it. This is normal preparation of bank reconciliation statement. Thank you.